And I guess I just can't help myself today. I can't help it. News, got some news, got to tell the people. 4 videos, 5 videos, doesn't matter. But at least 2 of my videos were very, very short. Super short. Little bonus for you because I love you. Wolf Richter, wolfstreet.com. You remember the other day I was mentioning a little problem in Spain? One of their banks, has a big problem. That bank, wasn't it Banco Popular? Weren't we just talking about that? Banco Popular's Coco bonds plunge as balance sheet chaos revealed in potential forced sale. I'll say it again. Banks in the word balance sheet is always followed by an additional phrase. Cooked the books. Banks, balance sheet, cook the books. Okay? So get ready for this. This sale process is atypical, as the seller itself cannot, at this point, make a rough calculation of what the value of the entity is. And if they can't, neither can we. The books have been cooked so bad, we don't know what the hell we're looking at. We can't even put a place of value. We don't know what real assets are, liabilities. We have no idea. This is unbelievable. Oh, wait a minute. Did I just say unbelievable? Maybe for the average person. For you guys and myself, this ain't unbelievable. This is the stuff I read you all the time. This is normal. Okay? Normal. The current share price of Spain's 6th largest bank, Banco Popular, at 67 cents currently, is just pennies above its lowest point ever, according to analysts at 20 different investment banks consulted by Bloomberg. The objective value of those shares could be anything from $1.50 to 25 cents. There's good reason for this uncertainty. Popular's books are filled with impaired real estate assets. That to me says junk. Toxic, foreclosed junk. That's what it tells me, but I'm going to use their words here. Impaired real estate assets that date back to before the collapse of Spain's gargantuan real estate bubble. They are now in varying stages of decomposition, and the prices at which they've been valued on the bank's books appear to have little relation with today's reality. It now turns out that not even Popular's management knows what's really going on Popular's books. So anybody out there by chance in Spain and you have a mortgage you're about to be foreclosed on, or they've just served you or something, you're going to be foreclosed, fight it. Fight it. Hire a lawyer and fight it. You may find they can't even find the entry in their accounting. I mean, we have no idea. We have no legal standing because we have nothing here. Worth a shot. Better than just packing your bags and walking and letting them take it. But anyways, so again, it now turns out that not even Popular's management knows what's really going on in their books. Representatives of Banco Santander and majority state-owned Bankia, the 2 banks studying Popular's books to decide whether or not to submit a binding offer for the bank before the deadline of June 10th, which, as you know now, you're seeing this about 11 days away from now, are having serious difficulties trying to understand Popular's accounts, according to Spain's financial daily Expansión. Although there is total collaboration from the struggling entity, Popular's management has not yet completed its own review of the impaired assets on the bank's balance sheets, and therefore cannot offer a precise valuation of the bank. Quote, a bank sells out of necessity, not voluntarily, said a senior official of one of the entities that is carefully analyzing Popular accounts. The problem, he adds, is that this sales process is atypical, as the seller itself cannot, at this point, make a rough calculation of what the value of the entity is, and if they can't, well, neither can we. Oh, guys, you need to treat it as a time bomb. You've got 11 days and counting. This heightened uncertainty has apparently exacerbated the run on the bank's deposits, as well as triggering further declines in Popular's contingent convertible bonds, the infamous Coco bonds. Cocos have no maturity date and are designed to be bailed in before taxpayers get to foot the bill. Thus, they're a measure of how likely investors think a bail-in is. Popular has 2 batches of cocos. Not to be confused with Coca-Cola or cocoa, like you're making some hot cocoa. This is not that. You don't want that. You're going to want Coca-Cola or hot cocoa, even the most garbagey kind you can get your hand on before you want some of these. Those issued in October 2013 are currently trading at 70 cents on the euro. That's below the previous lowest level registered in February last year, when Deutsche Bank's troubles sparked a broad, albeit short-lived, sell-off of cocos across Europe's financial markets. The second issuance from 2015 is in even worse dire straits, trading at 68 cents on the euro. The difference between the 2 positions is mainly due to the fact that the bank chose to raise the capital threshold at which the bonds would be bailed in from 5.125% for the first issuance to 7% for the second issuance. In other words, if Popular's capital ratio, which according to its latest results is just above the ECB's minimal threshold, falls below 7%, the bank won't make the coupon payment on the second batch of bonds. In such an event, investors would end up being stuck with bonds that have plunged in value and pay no coupon. Then, if regulators deem that the bank is failing, the cocos get bailed in, either by getting converted into increasingly worthless shares or by getting canceled altogether. So far, no bank has defaulted on their coco bonds, but that could be about to change according to Expansion. The current levels of Popular's cocos imply that investors believe there is a very real possibility that Popular will end up converting the bonds into shares. At the height of Deutsche's cocoa crisis, when investors feared that the capital threshold would be breached, the bonds fell to 69 cents on the euro, at the time the lowest point for any major financial institution. Popular's second batch of cocos just crossed that line. To reassure spooked investors, an official spokesperson of the bank has stated that the payment of the next scheduled coupon in June, it's not at risk. Deutsche Bank has already shown that this sort of situation can be turned around, and its cocos have recovered. But Deutsche Bank was still able to raise new capital, a luxury that Popular no longer has. According to Expansion, some of Popular's investors have already begun to calculate how their accounts would be affected if, as feared, the cocoa bonds were converted into shares. If that were to happen, it could send a very dangerous signal to the markets. Despite all the restructuring, forced mergers and acquisitions, and the 300 billion euro taxpayer-funded bailout of the country's savings banks, if you include all the government guarantees, Spain's banking system is not nearly as fixed as the authorities, both political and monetary, claim. More to the point, some investors may even begin wondering if Popular is the only bank in Spain to have massively inflated the value of the so-called assets on its books. Jason for answer, an absolute certainty answer. Not a chance in hell they didn't do the same thing. They sure as hell did. Sure as hell did. But it's not their time yet. As Francisco, I love whenever that name comes up, I've got to say it like the movie Elf. Francisco. Boy, that's fun to say. As Francisco Gonzalez, the president of Spain's second largest bank, BBVA, said during testimony in the Bankia case, accounting in the banking sector is so elastic that it's like chewing gum. The difference between a profit and a loss, a valuable or non-performing asset on a bank balance sheet, invariably depends on who's doing the counting and what methods they're using. It's only when a bank's accounting methods come unstuck, as is happening now with Popular, that the true condition of its financial health can be revealed. But by then, for many investors, it's too late to apologize. No, it's too late. It's too late. What's the key word there? Again, they said, more to the point, some investors may begin wondering if Popular is the only bank in Spain to have massively inflated the value of the assets on its books. In other words, cooked its books. I just told you, not a chance in hell. They all do it. So when do we find out about the other ones? Well, here's the answer. It's only when a bank's accounting methods come unstuck, as is happening now with Popular, that the true condition of its financial health can be revealed. But by then, for many investors, it's already too late. Good day, sir.